Let me ask you a question. Have you ever had a losing trade and decided to bail on your strategy because of it? If so, I'm going to take you behind the curtains of a conversation on that very topic in today's podcast. Says Aussie yen humbled me yesterday. I was too certain about the trade and made mistakes. Still battling that demon. What did you do? What mistakes did you make? Always good to be humbled. What mistakes did you make? I remember Aussie yen. That was the double top head and shoulders double. Now I know why it stands out. What mistakes did you make? Did you move stops back? Did you? Because mistakes are useless if we're not able to recognize them and learn from them. The addition of trades I shouldn't have added to the position. You said it was in your rules. If it was in your rules, it wasn't a mistake. Now we can argue the fact if it's a good rule, but if you said it was in your rule, so you technically didn't make a mistake. Unless it wasn't in your rules and you were fooling us yesterday. Unless you were fooling us, saying it was in your rules when it really wasn't. Here's the cool thing about judging mistakes, right? So when we judge mistakes, we need to ask ourselves, right? Because we often tend to make something a mistake when it's wrong, right? If the trade would have worked out in your direction, would you still call it a mistake? That's always the hard part about judging off of results. It's typically only a mistake or a bad or bad if it doesn't go in your favor. So you're sitting here beating yourself up like, oh, I made a mistake because it lost. Where if it would have won, you wouldn't have called it a mistake. A mistake should be a mistake whether it wins or loses, right? So that's why I asked, was it a mistake or was it? Because remember, we talked yesterday and it wasn't a mistake. All right? We talked yesterday and we walked through it and we put a big emphasis on, are you allowed to enter this? And you're like, yeah, we are. Yeah, I am. Right? So that tells me it wasn't a mistake, because if it was a mistake, it would have been identified before the outcome of the trade. So maybe you take notes and maybe you say like, hey, maybe this is a bad idea to double my risk, but I don't want to call it a mistake though. Because if it was a mistake, it's either one of two things. Either you knew it was a mistake and you didn't want to admit to it yesterday, or it wasn't a mistake and you did the right thing and it just didn't work out, and that's just the consequence. So we got to be honest when we judge ourselves on these things and know the difference between, did I make a mistake or not? You say, yeah, I will. So why will you remove it from your rules? What changed yesterday that now makes you want to remove it from your rules? Because if it's just a single loss, if a single loss is the only thing that's going to make you remove it from your rules, like that, I mean, you better get comfortable with losing, man. This is trading. You're going to lose all the time. So is it the loss that makes you want to change your rules? Or is it something else? And again, I say this because when we talked about it yesterday, there was no even kind of inching towards like, maybe that's not a good idea. It was very which I love. It was very confident. Yeah, I like this. I can do it. It's still from my risk profile, right? I just don't want you making a judgment decision off of a single trade. That's what I want to avoid, because that's the trap that traders get sucked into, right? Is they win, and as soon as they lose, oh no, something's wrong, and then they change something, right? I gave this as this was a perfect example, my trading year, right? I told you guys for the last like 8 weeks, what have I been doing? I've been a wounded crab, right? I was Wolf of Wall Street, Wolf of Wall Street, dead legged, crawling to my, what was it, a white, was it a Ferrari, Lamborghini he had? You remember the scene? He had a little too much fun. His legs went numb. And he had to make it back to the car. It was a white Lambo. Yeah, that was my equity curve. That was me. I was dead-legged, crawling, numb, trying to get into the white Lambo. That's one of my favorite scenes of all time. How easy would it have been for me to just start switching my rules when things weren't working? Very easy. But that's a psychological mistake. That's bailing on my system. That's bailing on my strategy. And what happens when you do that is you switch things up as soon as it starts working. Right? So last week, it all paid off. We did get a lower low, lower close on the dollar Canada hourly, by the way. Last week, it all paid off, right? I stuck with it. Trading got hot again. Boosted my equity curve by like 6%, 5%. But what if I would have bailed? What if I would have said, you know what? Nah, I'm not doing this anymore. I'm doing something else. I would have sat on the sideline, and then I would have been on that woulda, coulda, shoulda bus, where I'm looking back like, man, if I just would have done what I was supposed to do, I woulda, coulda, shoulda. So we want to be careful with how quick we bail. We don't want to make judgment decisions. We don't want to make emotional decisions based off of a recency bias. Now, if you're looking at other things and you're saying, hey, you know what? After our conversation yesterday, I realized it is kind of, maybe I don't want to put 2 trades on at the same level. I don't want to be involved in 2 of the same trades for different reasons, or take 2 entries into the same trade. Maybe if you realize that from like a philosophical perspective, that's different. Right? That's kind of like me not trading butterflies, where it's like, yeah, I just, it's not, nothing against butterflies, but it just doesn't make sense for me to trade here if I can't have a place to put stops. I just can't, it doesn't make sense from that perspective. Or it's like, hey, it doesn't make sense, like, we'll use Roberto's inside bar strategy, for example. It doesn't make sense. I can't, I'm not aggressive enough to buy right at the close of the inside bar. I need a more conservative approach, right? If you're making an adjustment because of that, that's fine. But to make an adjustment because something didn't work, right? Because we took the inside bar at market, and now the market moved against us and stopped us out. I can't just be like, oh, okay, next time I'm going to wait for the higher high, higher close. So you gotta have a good conversation with yourself, Greg, and ask yourself, why are you switching the rules, or why are you no longer doing it? Is it a short-term emotional scare because the most recent situation didn't work? Or is it because you see something deeper that says, hey, I don't want to do this because too much exposure, or doubling down, or whatever that reason may be? And that's the conversation I would suggest you having with yourself. But it can't just be emotional, because man, you're gonna if you're not comfortable with losing, you're never gonna be able to trade, guys. You better be very comfortable with losing. Doesn't mean you have to like it. You don't have to like it, but you better be comfortable with it. That's that's the game. That is the game. Let me just see real quick, going back through here. I can reach whatever objective I have by risking 0.5 per trade. I lost close to 2% yesterday. I'm not comfortable with losing that much on a trade. I thought I was, but I am not. So understanding that you're not comfortable. Well, going off of that, why not just reduce the position size? Would that be a solution as well? You can do the same thing, just reduce your position size, cut your position size in half, or by a quarter. That will give you the same max percentage. Would that be a solution? We'll get the dollar Swiss in a little bit, Rich. That could be a solution as well. If added risk is the only thing. So if it's not a philosophical thing about taking the same type of trade twice, my suggestion would just be to reduce your position size, reduce your risk, right? Cut your position size in fourths. So instead of risking 2%, now you're only risking, I think you said 0.5 per trade. But that goes back to the stem of the question. Is what bothers you the amount that you lost risk-wise? Because that's an easy fix. Or is it the added position? And that's what you got to figure out. That's what you got to figure out. All right, back to life, back to reality, back to the dollar Swiss. Rich is looking for trend continuation. Shorts dollar Swiss. We had this rotation. Hey guys, Akil here once again. Thank you for listening to the podcast. If you want to support the show, do me a favor, leave me a rating and a review, preferably on iTunes, but of course, anywhere that you listen to the podcast at. Also, if you want some more free tips on how to become a better trader, I recommend going to our website, www.tier1trading.com. Click on the button that says I want free stuff and check out one of the free webinars that we have. Trust me, it's going to allow you to understand and overcome many of the obstacles that you'll face on your way to becoming an independent, consistently profitable trader.